And I can hear you. All right. So this is Jesika Lennox with Mortgage Ingenuity, and we're here for not just another Mortgage Minute once again. Today, we are going to be discussing and going a little bit into mortgage refinancing and our options and what can that do for us. Jess, with the interest rates being quite low, tell me a little bit about the benefits of, what can we do when it comes to refinancing?
Yeah, definitely. So as you mentioned, interest rates are very favorable for homeowners right now. I've actually had quite a few people reach out to do refinancing as the weather's getting nicer. They want to do some stuff to their yards, curb appeal. We know how important that is to just even our likability of when we're outside in our own yard, and of course when we're selling. So I will show you a little bit about the refinancing benefit right now. And for those of you who don't know what refinancing is necessarily, it would be getting money out of your home. So I will share my screen. Let me just jump in here. So if you purchased your home last year, and let's say that your mortgage amount was $400,000, interest rates were hovering around the 3.69, and so then that made your monthly payment around the $1,832. Here's how the payments look on the amortization schedule with interest and principal pay down, what your balance is. So if we were to refinance this with interest rates currently, I put in an extra $50,000. That's not including the pay down. So you'd be looking at probably $55,000 to $60,000. And now the current interest rates are hovering around the mid twos. So what that would then do is make your monthly payments lower by almost $100. Allowing you to free up that money, or you can even plug it back on, and then that would go into your principal payments over the term of your mortgage. So that now allows you to have an extra $50,000 to $55,000 minus your closing costs to be able to put that in your. This is beneficial, especially in today's not economy. I feel like our economy is still.
Oh, we've lost you, Jess. Can you hear me? Here.
Hi.
Hi, welcome back. Awesome. So I'm glad. Oh, look at. Oh, hold on. I'm having you as if I admit you, does that mean I'm gonna have 3 people on here? Let's try. I don't know what this means.
Oh, it must be through my. Here, I'll cancel this.
Awesome.
2-way news anchor. Oh my goodness.
Glad to have
so yeah, it's not sure what happened there. All of a sudden it just kicked me out. Where did I leave off?
We were talking about the saving, or the how you'll be your payments will be $100 less with the refinancing. I think that's what I'm
Okay, so let me hop back in here. So yeah, it's going to be a little bit less to carry because the interest rate is going to be lower for your monthly expenses. If that's not an issue with you, I always advise people to add that extra on top because it just does pay down your principal more, and then you pay less into your interest. But then what it can do is, if there are any concerns about your next year, is those funds now can be set aside for living expenses, or you can, if you are thinking about moving, you can then implement that into making your home complete. If there's any jobs that you're doing around the house right now and it's just one more thing that you're like, oh, I've been living here for this long, I've been meaning to do that, you now have the funds to do so, and it's not out of your own pocket.
So how does that work, Jessica? So we're doing the refinancing, right? And I want to take out that $50,000. What do I do? Do I go to the bank and say, okay, I want my $50,000 and I put it onto my checking account?
Right. So with that is when we look at your scenario, and obviously we're going to have an amount of equity in your home. So that way we don't go over certain loan to values, because when refinancing, you can't go over the 80% loan to value. So then that way the lender's it's now an uninsured product. So that means that you can get insurance on it for the mortgage amount. But really the lenders just want to make sure that if there is any fluctuations in the market, they're not going to be overextending themselves. So it's just another way to leverage. And then with that is when everything gets refinanced, we approve you within your own ratios. We then go to the lawyers, they sign off, everything goes in trust, and then it gets deposited into your bank account.
Awesome. So you help with all of that, and I don't have to worry. All I have to do is call you.
Correct.
Awesome. That works even better. Now, I know for the viewers, if you have any questions about what Jessica's talking about today, please comment below. Let us know. We're taking a look at it. If we don't get to your question before this is over, we'll definitely reach out to you shortly after and discuss some more. If you have any ideas of what we should be discussing right now, let us know in the comments below, right here. So, Jess, there's different ways to get a mortgage, right? So there's variable rate, there's the locked-in rate. Which one is better? What is the difference? And in your opinion, which one is better?
So I'm glad you asked. It's all going to depend on the person, really. So variable rate statistically has shown that you are going to spend less on your interest with the mortgage. Just it does fluctuate. So if that's going to stress you out, then that's why a lot of people pick fixed. Is they know for 5 years they're going to pay this amount and it's not going to waver, and they know that they can have that in their expenses and it's part of their budget. Whereas with variable, as the Bank of Canada changes their interest rate and that affects the mortgage rates industry, our prime is you get either prime plus or minus an interest amount, and then that's how your monthly payment is made up. So with variable, it obviously varies. And what a lot of lenders do is they keep your payment the same. However, the amount of interest or principal is what's going to fluctuate within that payment. With fixed, it's just, here's your interest rate. That's what it is for 5 years. This amount of interest is paid off. This amount of principal is paid off.
Okay. Now, do you see a benefit of going one way or another, or is it a personal preference?
It's definitely going to depend on the amount of risk that you're comfortable with. And again, if things are fluctuating and that's going to stress you out, then I recommend going fixed. However, as I mentioned, statistically, it does show that variable is, you save more going the variable route. Okay,
perfect. And how do you guys have it? So we have a fixed mortgage, so we decided not to take the risk. How about you guys? How do you prefer your mortgages?
We have both. Like when interest rates were super low, it was easy for us to be able to lock in. However, too, when there was variable rates, when money wasn't moving as much, variable rates were really discounted. So a lot of people right now have, from last year, it was prime minus 1.2. So their current interest rate at prime is now at 2.45, whereas last year was at 3.95. So a lot of people that purchased either a high ratio or less than 65% loan to value have prime minus 1.2. Okay. So their interest rate currently is 1.25.
Right, that's pretty cool. So now, what if I have a mortgage that was, for 5 years? I'm 3 years in. My interest is like 3, or let's just say like 4%. I don't know. You name the number. I don't do those numbers. You do for me. Yeah. So, what happens if I want to break it? Do I have to pay? What if I want that mortgage, that low interest rate?
So what I do is I obviously look at the numbers. I have had quite a few people that I've worked with too that either are refinancing, or even just if we were to move their mortgage, we pay the penalty. So when I'm looking at your scenario, what I do is I look at the penalty that's going to be coming out, the closing cost expenses, and make sure that it's actually going to be worth changing your interest rate. Because if you're going to break even, then why go through the hassle unless you are taking money out? Then there's a benefit. If you're going to just be switching your mortgage or changing it for the interest rate sole purpose, not changing anything with the balance or taking money out of your home, then you're going to want to make sure that you're going to actually save money. And a lot of the times I've been able to save people like either on their monthly expenses, so that way it's less stressful on a monthly case by case scenario, or over the term of the 5 years, over the next 4 years, 2 years in your scenario, is we've been able to save up to like $30,000.
Oh wow, that's pretty amazing. So, is there any pocket payments that out of my pocket that come with breaking the mortgage, or not even maybe breaking the mortgage, but refinancing? Do I have to pay you or the lender?
So a lot of the times I'm paid by the lender. The times that I'm not is whether it's private financing, because then the private lender doesn't pay me. So then I work, no matter what, I'm working on behalf of the borrower and the lender. I'm not going to bring a borrower to a lender that doesn't suit that lender's qualifications, and vice versa. I'm not going to offer a lending solution to a borrower who isn't interested, right? There's a different scenario for everybody. But yeah, when you're refinancing, there are expenses associated with that. However, a lot of the time it just comes out of the refinance amount. So then it doesn't need to be out of your own pocket. And then that way, yeah, again, I look at the whole scenario when we are going through things and make sure that it's going to make the most sense for you and what your goal is.
Awesome. I think I think we've touched on a lot of the things that I wanted to ask you about. I'm not sure. Let me take a look. It looks like our viewers have not asked any questions just yet. Jess, is there anything that you would like to add to this conversation? Anything that you feel is very important for our viewers to know about refinancing?
Yeah, so we have talked a lot about interest rates, and as a refinance, a lot of time it's not at the end of your term, so we are breaking a mortgage. And something that a lot of people do discuss with me is, well, I saw this lower interest rate, or I saw this. Well, sometimes those lower interest rates prevent you from being able to pull out funds or rent out your house after, or get a second mortgage in place, because those lenders don't offer it. They're kind of a no frills type of mortgage where if you get it, yes, your interest rate is going to be a lot lower. But if anything ever happened and you did need to pull out funds, or you do need to move, those penalties can be significantly higher. The worst being a bona fide sale, which is if you ever broke your mortgage, you actually have to sell it to a third, like an arm's length party. So those are the types of things I want people to keep in mind, is when I'm looking at your scenario, is I'm looking at what's going to be best for you if something were to come up, like even a month after closing. Who knows if something happens to your parents? It doesn't even need to, excuse me, necessarily be yourself. But if something happens in your life that is going to change either your work scenario, your family scenario, your just financials in general, I'm looking at what's the best product for you, that if you ever need to change it, you get to keep as many of your assets as possible.
Thanks. And that makes a lot of sense. I think that's a really good point. I don't think you should be looking just at the numbers. I think you definitely, like Jessica said, need to look at the bigger picture and what is going to benefit you. So I'm glad that we're able to talk about this, because I think a lot of people do look at just at that number and don't take anything else into consideration. And I've seen, when the mortgage has to be broken, I've seen people pay $20,000. So it is significant.
Yes. Yeah, because instead of a 3-month interest rate, what they do is they can take 2.5% of whatever balance is left owing. So that is a very different amount that's going to end up in your pocket and be able to move you forward to the next phase that you're going into. So if you're shopping around, I highly recommend that you talk to someone who's actually going to take care of your file. I've had clients that are loyal to me that there's somebody who comes to them and says, oh, I can offer like not even 0.5% less, but it's one of those things that people will buy their rate down, and it's just not a comparable product. And because I've called them a year after saying, hey, I can save you $30,000 on your mortgage if we just implement ABC, they go, no, I'm going to stay with Jessica, because I don't know if you're going to call me in a year knowing that I can save money if you can just get this one deal out of me, right? So you really want to pick, I always say that, like, who's your power team? Who's going to make sure that they're not going to pressure you into something? Same when you are selling or buying someone's home, you make sure that you're getting their needs met. And that's what my job is to make sure that I'm going to be saving you and getting to your goals, whether you're an investor, a first-time home buyer, or like somebody who's going to be an empty nester and you want to just pay off your mortgage as fast as possible, right? So
exactly. And I vouch for Jessica. She is the bomb. I had a question in mind, and as usual, I'm having a brain fart here. Okay, you know what? This was a long enough pause for me. I still can't think of it. Oh, this is what I wanted to ask. So I know that there's probably quite a few people that don't know what they signed up for, and I get that all the time. Being in real estate, I don't know. A lot of people just know what they're locked in for. So they know that there are 5 years coming up. They have no idea how to get out of it when they fail. So if we have viewers or anyone else that here that's looking to find out, what kind of mortgage they signed up for, can they contact you? Can you get them that information, or how do they go about that?
Yeah, I can definitely help them obtain the information that they need, who to contact, what questions to ask, and where to move forward from there. And again, this is all stuff that I do on a regular basis when I'm working with my clients, is that way I can give them the best amount of advice and a proper disclosure of how much it's going to be for closing costs and everything else. Because at the end of the day, that's what people want, is they want to say, like, how much money is in my pocket, right?
That's right. Yeah. Very true. The bottom line is in your pocket, that's for sure.
Yeah, that's right.
So that's awesome, Jess. Well, thank you so much for coming again. Let me just double check. So we are still open to questions even after this is after it ends live. Please feel free to reach out to Jessica. She's Jessica Lennox with Mortgage Ingenuity, and you can see her number in the post. I think it will be up top. And also, you can also find her on Facebook and social media platforms. So please reach out to Jessica. Jessica, what's the number that they can call you on?
My number is 519-500-3608.
Perfect. And one more question, Jessica. I don't think I've ever asked you. Do you only work locally? How far out do you go in Canada?
So I have helped somebody out in Alberta. And then in Ontario, I've actually had clients out in Pembroke, Ottawa, and then I do the bulk of my business in Kitchener, Waterloo, Cambridge, Centre Wellington, Guelph.
Perfect. But if we had somebody from North Bay or Barrie, you'd be more than happy to answer those questions as well, right?
Definitely. A lot of my investors are actually out of town, so that's very normal, and everything's conducted online easily these days. So it's not a problem being able to have like physical distance between us.
Perfect. Awesome. Well, thanks again for joining. I'm Ksenia Pichorno-Martinez with Keller Williams Golden Triangle Realty, and this is my lovely Jessica Lennox with Mortgage Ingenuity. He's my awesome mortgage broker. Please reach out to us anytime if you have any real estate related questions. Thank you so much, and let us know what you thought of this, and if you have any ideas for our next show. I think maybe we should talk a little bit about other options besides refinancing in our next meeting. What do you think?
I'm down for that. Yeah,
awesome.
Always up for savings. So
so tune in about a week, and you'll get another reminder of our live video, and we'll chat to you soon. Thank you so much for joining us.